And we're live, Winston and I, and we've got good news for you. We've got all the data, we've gone through all the predictions and analysts and macro events, and they tell a story that is largely pretty. There are one or two hiccups in there, and I think it's important you understand them so that your golden retriever can look as happy as this one. And if you're thinking he's here just for the financial news, you might be mistaken. I do have a piece of celery on the desk, which I think he deserves. You think he deserves it? Go on then, Winston. There we go. Go. Very polite, eh? Very polite. Now he's dropped it. You're not a fan? All right, we'll see if he stays with us for a little while. And what is it that I really, really, really want you to understand so you become a brilliant investor in 2024? Well, first of all, come and join me tomorrow live, me and Winston, and we will teach you how we make our money work for us so you have to work a lot less for your money. That's the deal. Learn our 3-step trading system. It's right here on the screen, felixfranz.org/webinar, and make 2024 your best year yet, which is what I want for you, which is what you deserve. All right, we do have a few charts. We do have a few bits of fact and not fiction, and it's important. And I'm covering up Winston here, which I feel really bad about. What do you think? He's still there. All righty. So what does this say to you? This is the US 10-year yield. And yields, as you can see, have come down a great deal. And because they have come down a great deal, let me just make sure I see your comments at the same time. Because they have come down a great deal, the market has gone up. So the way this works is that yields go sideways. That's not what we wanted, is it? Let's get this pen here. Yields go down and the market goes up. But what can you see when you zoom in a lot? We're going to zoom in a great deal here. You see this little breakout here. If that continues, it will break the trend. You break the trend, you break the party. We don't want to break the party. So watch the US 10-year yield today. We'll go have a look at it live in a second as well. The second thing that I always look at, and I know it's not the sexiest thing in the world, but it's really, really important because it drives like half the market. Winston's left the building, although I have vegetables. You'd think that would keep him here, but not so. This chart here, and I'll make this sort of full screen-ish. Let me move this over a bit, and then we can make this a little bit bigger. Less me, more chart. I think it's important in that order. You have the S&P at the top here in sort of purplish. That's the S&P. And then in yellow, and I know I'm using yellow for both just to keep you on your toes, you've got the VIX, the fear index, but we've turned it upside down. You're turning me inside out and everything else. And what can you see? Well, they move together. Now, the trouble with this is that there is this green circled gap up here. And that is not something we like to see. Because if the VIX on this chart is lower, the S&P should follow it. That's kind of the correlation logic here. So watch a little out for that. But I won't want you to worry today. I don't really want you to worry very much today. I think it's going to be a glorious day. And here are a couple of reasons. Interest rates are, well, going back to normal. And that means stock prices go up. Stock prices go down when rates are higher. Stock prices go up when rates are lower. Very, very simple. And next, consumers have actually got money. Lots of the stuff. Billions of dollars of the stuff. For a couple of reasons. One is that wages have actually gone up a little. And secondly, they've been handed out helicopter money by governments, and the wealthy just got a lot wealthier in the post-COVID rally. And that's a lot of people. And if you are wondering just how much, here it is. Here is a bit of data for you. $5.9 trillion sits in money market funds. And I've told you before, I think that's $1 trillion more than the year before. And 2.3 trillion of that is retail. So $2.3 trillion of you and me money, like retail people money, is sitting in money market funds. Now, what's a money market fund? Bonds, right? So the people bought bonds because interest rates were going up and they wanted to make the money, and they wanted to make the money as the rates come down. And I've been talking about this trade for a year. So that's pretty good. Commercial bank deposits in cash are 17.3 trillion, which is insane. And there are 86 million households in the US who own their homes. 40% of them have no mortgages. I love those 40%. That's who you should aspire to be. Have no mortgage. You think we can get Winston back? Winston, do you want to come back? Come on. Let's see if he'll give us another. Over here, over here, over here. Come on. All right, come on. Good boy. All right. What do we think? Can you just about... we're blocking him slightly. There we go. That's a crime, isn't it? What about baby bok choy? Any more interest in that? I think what he's really saying to me is, do you have any idea how many snacks I get in your kitchen during the day? Clearly, you do not. I've eaten bucket loads of the stuff. I'd like something more tasty. But let's get back to households and how you're going to make money this year. Labor markets are still pretty strong. There are literally almost 9 million jobs openings out there, begging for anybody to take that role. Still feel bad that we are blocking Winston's little face here with something as pointless as what we're looking at here. So that'll do, right? And Winston. And we've got, you're a lovely creature. We went for a swim this afternoon with me. Now, we've also got manufacturing to some extent returning to the shores of the United States, particularly in chip manufacturing. We expect a lot of AI, chip-related manufacturing to come back to the US, and that's boosting capital spending. When you boost capital spending, you might actually drag the miserable manufacturing sector out of the recession that it's clearly in, and that will be good for stocks. Housing is going to have a party and a backflip. Why? Because even though the market hasn't tanked because of higher rates, because you lot were very, very smart to lock in 20, 30-year rates at mortgages at very, very low rates, people didn't really build that many houses. And developers certainly aren't, because they do actually need to go out and finance the developments. So as rates come down, that becomes more and more attractive. And the housing market is likely to become more liquid again and pick up steam. Winston looks ever so serious, doesn't he? He's like, very serious stuff you're talking about there, Felix. Have you got any more of those vegetables? Corporates and their cash flow. The Apples and the Microsofts are sitting on so much cash, it's actually hard to believe. About 3.4 trillion. What does that mean? It means one thing and one thing only. Buybacks are going to be back with a vengeance this year, which means they buy their own shares. This means there are less shares available. He's had enough now. He's like, enough. You going about buybacks? Seriously? No vegetables in sight? I'm leaving. And go. No, just sit down. Just relax. That's a good thing. It's essentially reverse inflation. So it means that you own a stock, and its stock becomes rarer and rarer. It's sort of a little bit like the crypto myth, and therefore it becomes more valuable. It's brilliant. It's like if you bought a masterpiece from an artist, you only made 5 of the same thing, and then one by one the other ones got burnt. Yours would be a lot more valuable. That's a sort of analogy for you. Now, inflation. Apparently, and don't think I can bring myself to say it, transitory. Is Jerome Powell right? Well, goods inflation is looking like it's a done deal. You see, it makes me ill to say that the Fed president is actually right. I have to have some water on that shock here today. Service inflation is still pretty elevated, but provided that comes down too, partially because the labor market might tank a little, inflation might be actually well and truly behind us. And then we've got lower interest rates. I can hear chomping. Someone's discovered the celery on the floor. And what do lower rates mean? Well, yes, it reduces the burden of interest in on the US government. And you might therefore think that's brilliant. But the way I read the Muppets in Washington, they're just going to go and pile up more debt because they can sort of afford to. So that's a little bit of a downside. But in the short term, it keeps the party going. I mean, it's like it's 4 a.m. and someone's just discovered another crate of whatever it is you like to drink. Champagne, whiskey, whatever. And you probably shouldn't be having another drink at 4 a.m., but in the moment, it feels like the right decision. So you have another couple and you probably have a worse hangover for it. But for the moment, 2024 isn't the hangover year. No, it'll be sometime down the road when, Biden and co have all gone to greener pastures. Well, browner pastures if they don't get cremated. Now, there is also, and there hasn't really been, any money shredding. And we were worried about money shredding. And what I've got on here in white, can we get a white pen? White pen would be helpful. In white here, that is money or liquidity. And it hasn't really gone down, right? This was sort of the peak. And we're back there. How's that possible? I thought the Fed is shredding money. Well, have a look at this. If you look at bank reserves and the Fed liquidity, okay, it's come down a little bit from the levels up here, but it's actually picked up again. So thanks to the banking crisis, thank you, all you incompetent managers of small and regional banks. We salute you for the rally that you've given us in our stock portfolios. The Fed has basically undone a lot of its good work and has started to essentially, effectively print money again. And this will continue because the banking crisis would otherwise kick off again in March, because that's when the temporary bailout stuff disappears. It's not going to be temporary, it'll be permanent. One thing I've learned, bailouts are permanent and they continue forever after. Once you've given, you can no longer take it away. It's some sort of, 12th, or whatever you call it, religious, thingy. Now, I'd also encourage you to make this the best year for yourself ever and come and join us. Come and join us tomorrow live. It'll be fun. It'll be glorious. I will teach you our 3-step simple, and I really do mean simple system, which allows us to make very, very nice returns, allows us to make our money work for us in a smart way without being right. We don't have to be right on whether the market's going to go up or down. And that's one of the real beautiful things with options is I make half my money when I'm wrong. So come and sign up at felixfranz.org/webinar and check it out. Now, feel free to ask me a gazillion questions. They're probably mostly about Winston, which I appreciate. I know he's a really special little being, isn't he? He's really something. I went for a bit of a stroll with him this afternoon, and I do want to show you a couple of other things, by the way, not just this, in terms of, open market and everything else. And we can look at your favorite stocks and just ask away anything that's on your heart. We shall aim to answer here. Pre-market looks fairly red, but going back to Winston, yeah, he's just so sweet. And everybody knows him. Everybody's like, oh, is that Winston? Yeah, that's Winston. And then we met his favorite friend of the moment, who's a Labrador, who's 1.5 years old, called Tofu. And he's sort of cream-colored, white-colored. And then they went nuts, chewed each other. And then they raced down the little pier and both jumped in the water together, much to the slight panic of his Tofu's dog walker. He might be in trouble for that. So did Winston get any Christmas presents? That's an important question. He did, actually. One of his best friends got him a new water bottle drinking thingy. That's kind of his Christmas present. He loves having people over. So all the lunches and dinners and stuff we've had, he really enjoys company. So he's just happy when people are here. We've had some nice people over and children over and everything. So he loves the more the merrier. I think that's very much his approach. Now, why is the market so gloomy and red this morning? Like, it's a little bit of a knee-jerk reaction. We've had such a good run. You just get a bit of a bounce. Apple down 2.2% is the only thing that actually concerns me here. Let me have a look at the 10-year yield for a second. And it's up. And that also has something to do with it. That's what I was just showing you on the previous chart. The more this goes up by, what happened to all our indicators? Somebody ate our indicators. Here's one. We need volume, otherwise we're blind, deaf, and dumb. And yeah, it's kind of, are we through this trend? We connect that, something like that. Yeah, we're slightly above it. So if we close at the sort of close to 3.95 today, that would not be brilliant for at least the immediacy. Now, what's happening with Apple? I didn't see any Apple headlines. Barclays has downgraded Apple, but really, Barclays, you trimmed your price target by $1. I mean, really? Sales weakness, stocks falling. Really? We're listening to Barclays? Okay. The market's, it's a slow news day. That's the way I would look at it. If you look at the stock chart here, pre-market, we're trading down here, which is below the trend. But it is still above the 50-day moving average line here, which is this yellow line that's coming down here. So as long as we stay above sort of 186, 87, I think we're okay. You break below that and you might do one of these jobs here again where you overreact violently because, well, you can. Sometimes it's fun to overreact. Let me see any questions here. Winston is a Hoover, not a rabbit. He is very much. He'll eat anything, that dog. Do you recommend getting bar chart premium? No, save your money. You don't need it. I mean, I don't use it. I don't think you need it. Really not much point. Is it possible to have a bear put spread with a break even above the current trading price? Yes, of course. Of course. Statistically, aren't we meant to be up first trading day of the year? Yes, but it's still early. It's still early in the day. Who knows? Funnier things can happen. You have pretty low trading volume on these days because, you know, the bankers are still skiing, obviously, or in the Bahamas, one or the other, depending on what shape they're in. And therefore, it's fairly easy to move a market, especially pre-market. That's why Apple is red. Dollar is up nearly 1% today. Yeah, and I also saw that, and that is that's a hedge trade. You know, when you get moderate panic, you buy the dollar. The 10 years also up. So yeah, it's a little bit of a correction, mini correction of our longer term trend here. But if you connect the dots, it's not, you know, wherever you want to put that line, something like that. We're not massively, we're in the direction of the resistance line here, but we're not really breaking out of the trend. So it might just be a bit of a touch of a pullback. Jeff says, we love Winston. I certainly do too. He's glorious. Dave, why Fortinet over CrowdStrike? Interesting. I don't know as much about CrowdStrike. That probably has some explanation there. I also wonder if Fortinet might be the larger player, but I could be wrong on that. I don't know as much about CrowdStrike. That's probably the better explanation. SoFi is down 4%. Okay, so it is one of those mornings. It is one of those mornings where I say the sun will shine and the universe conspires against it. Down 2% this morning, pre-market, 1.8 now. It's not the end of the world. It is a bit of a hiccup. That's really all it is. How do you feel about Coinbase? I think it's a brilliant business, and it's probably going to come out as the one that's actually regulated and legitimized, whereas they've kind of managed to shut everybody else down. Profit margins are insane. I do really love it. The only slight challenge is that its valuations go up and down with Bitcoin tremendously. If you look at the correlation with BTC USD, use the Coinbase one. It basically moves in tandem very, 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 very closely. And that's kind of what, I wish it wasn't. I wish it was just doing its own thing. It seems to be growing up a little bit, which is nice to see. But yeah, if it wasn't correlated to Bitcoin, then I would be very interested, to be honest with you. NEO's going up, just I'm afraid not. It's down 0.6% pre-market here. Not a big move. It's within last trading days trading range. It's sort of just that. It's kind of caught between the 150 and the 200-day moving average line here in the background. So nothing to see here. It's kind of the way I would characterize that. Any other questions you guys have? Put them down below in the chat. And I would be very happy. China industrial production beats expectations. Yes, slightly, which is good. So maybe if we can get some stabilization going there in sort of Chinese domestic demand, that would be helpful. How will PayPal perform this year? You read my mind. I've just 5 minutes ago finished a video which is entitled "Is 2024 PayPal's Year?" So give it half an hour or so, and I'll ping it out. Make sure you're subscribed, and you'll get your pause on that. What do you think about Tesla's production and delivery numbers? Are they out today? I haven't seen the numbers yet. Or are you speaking, generally speaking? I saw a great, big, beautiful chart yesterday. Oh, okay, here we go. The data. $1.8 million cars hitting its full year target. I saw a chart on it yesterday, but I didn't actually read the article. Bloody Wall Street Journal. I canceled my subscription to it. Tesla, Bloomberg. Otherwise, we go on Twitter, which is usually better. Yes, let's do that. We logged in on Twitter. Oh, white background. Oh, dear. What's going on there? I don't usually use this browser. I thought I'd use this to stream with. Okay, people you follow. Here we go. Okay, production 476,000, deliveries 461,000, a little bit of inventory, but that might be just a timing issue. Model 3Y is the whole thing. 2023 overall, just under 1.8 million. Actually, other models just over 1.8 million. I think it's very solid. I think, honestly, it's very, very solid. I think some people were hoping for the 2 million thing, but that's 35% growth year on year. I mean, that's probably better than what NEO did, right? At a much smaller scale. And it gets harder and harder the bigger the scale. So I think it's very impressive, to be honest with you. Winston's also here, who thinks it's very impressive. Don't you, Winston? What do you think? Hang on. What do you think? That was a nose. So no, I think that's pretty solid stuff there from them. How is your options platform available for people living in the UK? Channel settings? Yes. So we have a software which is called Options Watch. Links down below. I can't seem to pull it up, but link is down below. Optionswatch.io, and that's just a tool that we use to make it easier to trade. Here it is. This is actually what it looks like. So you can look at, say, my watch list, and then if you wanted to trade, I don't know, what you would want to trade, NEO, for example, then it'll load up a chart and it'll give you sort of a visualization for what your P&L looks like. And you can trade options in the UK. You don't need to own the underlying. But what I'd really recommend you do is come and join me live tomorrow, 10 a.m. Eastern time, and I'll walk you through actually how we trade and how it works. We do some live trading together and everything else. felixfriends.org/webinar. felixfriends.org/webinar is the link. I'm very lucky because I'm massaging a very soft head here with my left hand. You can just see a nose here in the corner. Now, the cost for that, well, there's a 30-day free trial, Options Watch, and then it's $15 a month US, so it's pretty inexpensive. Financial freedom. Do you do portfolio reviews? We don't read. I did it for a while. I just sort of run out of time. That's the challenge with it. Of course, if you're one of our coaching students, you've got like a whole year to talk to me and my investment banking team. And then of course we're super happy to talk about your whole setup, not just your trading setup. So that's maybe the thing to think about. Happy New Year to you too. Appreciate that. TL, brilliant. I love that you got your planner. I know we were talking about it on Sunday night on our coaching call. I appreciate that you are filling that out. It takes a while, doesn't it? It takes a little bit of time. And I think you think, oh, I've just written it all out. And then you think, oh, there is also my health, and there's also my relationships. And there's also, there's so many aspects to a beautiful life. And I really hope that it helps you to really make those plans and visions and helps you to trigger you to what you want your life to be. Hopefully it'll be golden retriever filled. Hang on, here is one. Can you see your nose? That's just a nose. There we go. So, David, love it. When you're coming back to London, glorious summer. Yeah, I'll probably be there. Well, I'll definitely be there in May, and then over the summer I'll be there a fair bit. That's sort of when I like the weather. Before that, it's a little too unpredictable. Actually, having said that, I will pop in very briefly in January on a bit of a trip, and I'll be there for about 2 days or so. Actually, meeting with our Options Watch co-developer. Well, not co-developer. He's the developer. I just come up with the crazy ideas, and he has to sort of put it out there. So that's a job and a half, isn't it? Having to deal with me. But no, he's lovely. He's one of my mentees. He's called Jeff. He's amazing. If you use optionswatch.io, you will be using basically what he designs and what he builds. And then there's a team, of course, behind it too. But he's the head honcho there. So yeah, thanks very much for that. Where can you buy the planner? There's a link in most videos, which will be just, my planner, and you can buy it on Amazon, basically. That's the place to get it. They're sometimes a little tardy, but yeah, you will get it. Right, any other questions? Let me know. Jiri says Palantir below $17, bounce back up. Let's have a look. PLTR. It's a little outside of the range, isn't it, here? It's below the December range, which isn't brilliant, but it is, as I say, a very low volume day, so I wouldn't put too much emphasis on this. What I would look at, though, is that kind of maroon line here, which is the 150-day moving average. That sits at 1680. So 150 or 100-day? 100-day moving average. At 1680, you want to stay above that. As long as you do that, I think you're okay. But yeah, market's open. There we go. But give it a moment, and now it's going to drop below that line, isn't it? Yes, it is. Felix has jinxed it. It's his fault. Well, let's see what the next couple of hours bring. Markets have a funny way of mean reverting. What did you have for breakfast, David? Seriously, you want to know what I had for breakfast? For breakfast, I usually have, I get up, I exercise. And after exercise, I have breakfast, which was this morning porridge. But I add to it chia seeds and hemp seeds and cocoa nibs and coconut oil and a bit of salt. And that's basically it. So I tend to have that most mornings, which is a lovely kind of way. It doesn't give you the crash and burn as sort of pure oats can sometimes do. So there we are. We've covered breakfast. I love the question. Thank you. Aris mining, Donovan. I'm not really your mining guy, to be honest with you. It's just not really something I have a lot of expertise in. I know enough that it's something that I don't fully understand. I met a lovely mining engineer at the airport last week who was telling me all about mining gear and equipment and the challenges and everything else. He does gold mines mainly. And I just think, wow, it's amazing. I love that. Very interesting. I love to learn, but I just don't know enough about it. So therefore, I stick to something that I can actually understand. And that might be more something that I use, like a Microsoft or something. Now, if you're an engineer or some sort of physio, whatever, then go for the mining thing. Or you can, of course, dig yourself into it, but you have to dig quite a lot. That's what I've really learned. Do you think NIO will give the guidance for Q1 deliveries, Toby? No, I did a little clip on that yesterday, right, which upset some people. Never my intention, by the way. The point I was making is that the way they give quarterly guidance is that they only do it on their earnings call for that quarter. Now, the next earnings call, according to schedule, is on the 21st of March. So you're going to get guidance for 9 days, but then again, none for the following quarter. And I think that's a little bit of a shame. I'd like it if they gave us quarterly guidance. I don't think they will, but I would like it if they did. So we are kind of flying blind, basically. ASML. Yeah, it's an interesting one. Let's see what the stock's doing here this morning. It's down very significantly. Why? The Dutch government has banned certain equipment exports to China. Undoubtedly, the friendly Americans twisted some arms to make them do that. And it did undoubtedly dent ASML somewhat. Now, has ASML already shipped all the equipment it possibly could to China in the last 12 months? Yes. So they've had a great run out of it, but now they're going to have to come up and do an NVIDIA and come up with a machine that isn't covered by the export restrictions. I think that's really what they've got to do. Any other questions? Pop them out there. If you missed the beginning of this video, feel free to pop back there as well. You can see a tail here in the background. I haven't grown one yet. What was that film where the guy had a tail? Some silly space comedy from the 90s. Does anybody remember that? What was that film? That was very funny. Were you in it, Winston? I don't know. All right, there we are. Any other questions? Pop them down below. If not, come and join me live tomorrow for our live trading training, Wednesday, 10 a.m. And I'll break down for you how we make your money work for you. Automated, 3-4 hours a week. Very simple. That's the promise. Spaceballs, that's the one. Yes. Oh, I should rewatch that. Do you think it's bad now if you rewatch it? I enjoyed that. What was that dog, half dog, half human person called? It was very funny. We should definitely rewatch that. Winston makes his appearance. Well, Winston's tail does. If you scroll to the beginning of the video, you'll actually get to see Winston fully. John Candy as Barf. Yes, brilliant. John Candy was the actor. Barf. Yeah, that's very funny, which is now dog food, isn't it? That's one of the great classics. So what about snow? Somebody says. Let me have a look at the snow chart. Snow's down 2.5%. Just seems to be a little bit this morning, sort of tech jinx around about. Let me have a look at headlines. I'll share my screen with you here. Oil advances as around warships in the Red Sea, ratchet tensions higher. Yeah, I don't think that's really going to mean much. It's probably done for domestic consumption. And Tesla falls behind China's BYD in quarterly EV sales. Yeah, but China is the biggest EV market in the world. What do you expect? And they make cheaper cars. They make a lot of models. I see a lot of BYDs on the road here. Those 7-seater vans they have, very tempting. I wouldn't mind getting my hands on one of those. US pressured Netherlands to block China-bound chip machinery. That's why ASML is down here. Bonds retreat after the rally, and that's kind of what we opened up with, isn't it? US 10-year yields. The yields go up, the markets go down, and the yields are up 2%. So you would expect the market to go down. The market isn't down quite as much, but it still is somewhat down. David saying, good options expirations for options. Yeah, third Friday of the month is a good place to be. If you're trading the index, it matters a lot less. And also, we never hold into expiration. We get out of that thing 20 days before. So the expiration is less relevant than you think. And what was my thought? I just lost my train of thought. I can't remember what it was. There we go. Pat Winston for me. If you get a chance, I will. I've literally got my hands on him here. Did you see that? He's saying, let me out or give me more snacks. No, he's actually leaning against me, which is very sweet. I wish you a glorious day. I don't think the Santa rally is over. I think the setup is actually pretty much perfect and beautiful. We do have jobs data out tomorrow, jobs data actually. That is kind of important-ish, and FOMC minutes out tomorrow as well. So we're going to kick the year off with a Fed bang. I love you for tuning in, and come and learn with me tomorrow. felixschrenzer.org/webinar. Learn how to make your money work for you. 3-4 hours a week is all you need to make that happen. And it's way simpler than you think. I'll give you the rules. We'll do some live trading together, and you can pummel me with tough questions, which might be fun. So thanks for tuning in. I'll hope to see you on the next one.